And major stocks indices in Asia were mostly lower today as U.S. futures pointed to another volatile session for Wall Street after Apple lowered guidance for first quarter and warned of weaker sales in China. South Korea's Kospi fell 0.81%. Over in the Greater China region, the Hang Seng Index gave up earlier gains to slip 0.22%. The mainland Chinese markets reversed its earlier gains as the Shanghai Composite closed largely flat at about 2,464 points. The Shenzhen Composite lost 0.837%. The ASX 200 in Australia, however, rose 1.36%, with all the sectors seeing gains. And Dow Jones Industrial Average Futures pointed to a decline of 342.24 points. Meanwhile, S&P 500 and Nasdaq futures were more than 1% lower, pointing to declines kicking off the indices next trading day. Now, it's going to be a tough day for technology stocks after Apple warned first quarter sales will be less than it previously expected. The broader market will suffer too. Apple said it sees first quarter revenue at $84 billion versus a previous guidance of a range of $89 billion and $93 billion. Analysts expect a revenue of $91.3 billion for the period. Apple blamed most of the revenue shortfall for struggling business in China, but the company also said that upgrades by customers in other countries were not as strong as they thought they would be. Well, I'm back here on the domestic commodities front. After the Christmas and New Year festivities, there have been some mixed movement in domestic commodity food prices. But let's find out why from one of the research analysts with financial derivatives company, Adedayo Oguniro. Good afternoon, Adedayo, and Happy New Year to you.
Good afternoon, Chimeze. Happy New Year to you.
Well, we've seen the price of rice going down after this festive season. Beans is down to about by 24.5% to about 20,000 naira now. But then, price of yam is going up. There seemed to be some kind of mixed sentiment on the domestic commodity front. Can you explain why this, and is this trend expected to continue this month?
Consumers usually stock up ahead of the December festivities in the second half of November and the first half of December. So that time we see demand increase and prices increase. So in the first half of December, particularly, a 50 kg bag was about 16,500 naira. But after Christmas, demand begins to slow because households are well stocked already. So in the second half, since then, we've seen price of commodities decline. Most commodity prices have declined, but the price of yam is up, and that is not aberrational because the peak of harvest is usually in the third quarter. So when it starts getting to November, December, the price starts to increase. And the demand is usually higher also in December because there's usually an increase in demand for yam in order to make pounded yam. So that together explains why the price increased while others declined. So I think the trend in January is going to be sustained. Commodity prices, most would say some commodity prices decline further, while some would remain flat because consumers would have more priorities in January, and that's going to slow demand in the commodities market.
Now, January is usually a time when parents pay school fees and other essentials, and that reduces their purchasing power. What impact will this have on the inflation data that is expected to be released on Tuesday, January 15?
In the month of January, there's usually a decline in aggregate demand in the domestic commodities market. One, because some consumers, the leftover from December is still there. Some consumers are still trying to recover from the huge spending in the month of December. While some parents, like you said, some parents are paying school fees, some households are paying rent. So that slows demand in the domestic commodities market. So one just note here is the inflation data we are expecting on January 15 is actually for the month of December 2018, which has nothing to do with the spending in January 2019 now. So the factors that are going to influence December 2018 inflation are diesel prices. We are going to see the demand in the first half of December to push inflation rate higher. But here in January, we will see demand pull inflationary impacts muted, and that would become apparent. That would reflect on January 2019 numbers, which we expect by mid-February.
Thank you very much for your time, Adedayo. Adedayo Oguniro is one of the research analysts with Financial Derivatives Company. And Sudan is seeking funding from unidentified nations to ease its economic crisis as protests continue against President Omar al-Bashir's three-decade rule. The central bank governor, Mohamed Kher al-Zubair, has outlined a three-month plan to boost revenue, bring in hard currency, and print more banknotes. The African nation, which devalued its pound at least 3 times in 2018, is suffering from severe cash shortages and inflation of almost 70%. Widespread discontent with Sudan's soaring living costs has fueled a wave of protests that has posed one of the greatest challenges to al-Bashir since he came to power in a 1989 Islamist-backed coup. And Uganda's budget deficit may narrow to 6% of gross domestic product in 2019 to 2020 as the country concludes investments in 2 big hydropower projects. The financing gap in the 12 months through June 2020 may drop from 6.6% of GDP this fiscal year as the government completes the 600 megawatt Karuma and 183 megawatt Isimba plants. The fiscal shortfall in East Africa's third biggest economy is expected to gradually narrow to 2.6% of GDP in 2023 to 2024 on the phased reduction in big public investment projects. Uganda sees resources in the coming fiscal year rising to 34.3 trillion shillings from 32.7 trillion shillings in 2019. We'll take a break, and when we come back, we cross over to the Nigerian Stock Exchange for an update on today's trading. Stay with us.